with Chinese stocks like Alibaba up 53%, Pinduoduo up 93%, and also Baidu up 53%, a lot of people have been asking, is the bottom in for Chinese stocks, right? So this is a question I'm going to explore more in detail in this video. So stick around, get some popcorn, and I hope you enjoy this video, right? So first of all, let's start why this rally started, right? So on March 16, there was this article basically released that China says it will support Chinese IPO abroad, call for closure on tech crackdown, right? So basically, I'll summarize it for you. So three things they have mentioned is, first of all, they might allow the US regulators to look at the China companies' books, right? So basically, there's a law that, Chinese companies are not allowed to disclose their financials to the outside people because of national security risk or whatever it is. So that has been the reason that there's this even delisting fiasco in the first place, right? And I think it's rightly so done by the US, because a lot of these Chinese companies are actually fraudulent and they are cooking their books, right? So that is bad for investor protection. That's why the US wants to delist them in the first place, right? So in a way to prevent these Chinese stocks from being delisted from the New York Stock Exchange or the Nasdaq, Chinese officials have contemplated letting the US regulators basically look at the Chinese companies' books, right? So I think they'll be quite selective with this as well, right? I just my 2 cents on it, because I think a lot of the Chinese companies, especially the smaller caps, are actually cooking their books, right? So yeah, that's the first piece of news. So second piece of news is actually the tech crackdown, right? Basically, they have mentioned that they are slowing down the tech crackdown and it's almost to the end, right? So a lot of people have been running around saying that, oh, the tech crackdown is over, right? As you can see, the stock price basically reflects this, right? So from extremely bearish sentiment, once this news came out, it just ran like crazy, right? So you can see, obviously, a lot of people are pricing in that this tech crackdown is over, right? So I want to take a look at another article, right, which is kind of contrary to this kind of opinion, right? So China is forcing Alibaba and Tencent to cut over 50,000 jobs. So I don't quite believe this China is forcing part, but I do know Alibaba and Tencent is cutting jobs, right? So when Tencent and Alibaba are cutting jobs, obviously it means that their need for labor is contracting and their company growth is also contracting, right? Because if you're growing fast, you need to hire more people, more engineers, more salespeople, or whatever it is, right? But we can see that obviously they are cutting down, right? So when they are cutting down, and I really don't think the Chinese government is forcing them to cut down jobs, right? Because obviously the Chinese, like any other economy, wants maximum employment, right? And just to say the country is forcing a company to unemploy people is kind of weird, right? I don't think that sounds very right to me, because a lot of times, obviously, the country doesn't really care like how you run your company, right? As long as you don't do any unethical practices or whatever it is, right? And if you hire way more people than you need, right, the country will basically say, good for you, you waste your money on labor, but our GDP will continue to grow, right? That's how the lawmakers probably look at it, right? So yeah, I think basically, in my personal opinion, Alibaba and Tencent are cutting because their companies are actually contracting, right? Because of the economic slowdown over in China. So they'll never say that it's a recession, but I do believe that their growth is obviously slowing down, right? Because of this whole Evergrande fiasco, and also these consumers are basically becoming more wary, right? Just imagine all of your net worth is in real estate and real estate gets halved in price. You'll feel poorer as well and you'll spend less money, right? So yeah, that's my 2 cents on this article. I'm not going to go through the whole article because basically I'm here just to summarize things, right? So if you want to read the articles, do read it yourself, right? So if you enjoy me summarizing all these articles, do help me smash up the like button, hit subscribe, and also hit the bell button, right? So now, next thing is Tencent earnings reports, right? So Tencent reports slowest revenue on growth on record, right? As China regulatory headwinds remain, right? So this is actually only 23rd. So basically this is yesterday, right? So what happened within this March 16th? These crackdowns are over. Basically, the sentiment in New York Stock Exchange and also Nasdaq was, oh, Chinese crackdown is over. There's no more crackdowns. And just yesterday, when Tencent reported their earnings, basically their revenue growth was incredibly slow at only 8% year over year. So basically, this is the slowest they've grown in the past 20 years for when they are listed, right? So more specifically, 18 years, right? So basically, their profits were better. So 94.96 billion versus 30 billion yuan expected, right? So that's up 16% year on year. But this was thanks to a one-off item, right? Selling disposal of assets, right? So of course, a one-off thing. So next, I really want to talk about this last thing, which is actually the 10-year treasury, right? So when the 10-year treasury goes up, basically all assets will go down, right? Most assets anyways, because the 10-year treasury is basically the risk-free rate, right? So if you park your money with the US government, this is basically you buying the US government's debt, right? And our assumption is that the US government will never go bankrupt because they can print their own money, right? So basically, this US treasury, as it goes up, right? So currently it has gone from 1.3% to 2.3%. So this is like almost doubling of the risk-free rate, right? So this has not so significant impact yet, but when it goes to 4, 5, 6%, right, as the Fed envisions it will, right? They say by the end of this year, the Fed funds rate should be about 2% or something like that, right? So if it's at 2%, this treasury rate will be at 4 point something percent. So I think a lot of the multiple will compress. So I don't think this will specifically affect Chinese stocks that much because obviously the risk-free rate, the real interest rate in the first place will not affect the Chinese stocks. Obviously, the risk-free rate will affect Chinese stocks. And I know this is sort of confusing, right? But when you look at the Fed funds rate, that is the rate that the Fed basically gives the banks. Here, you can lend at this rate, right? And basically in China is going down while in US is going up, right? So this risk-free rate is how people used to value assets, right? So that's a very big distinction, right? So fundamentally, I don't think the Chinese companies will be hit by this increase in Fed funds rate, but they will be hit in this increase in risk-free rate, right? Because all assets will be revalued lower, right? But personally, I feel like all these stocks are basically battered down so badly that it's not really the valuation that matters right now. It's more of sentiment and also the trading and also what the government says, right? Because basically you can see that the moment the Chinese government says something positive, you can see this sort of effect. So yeah, after all that, what's my summary? What's my take on it, right? So my take on it is I'm not quite sure whether the tech stocks have bottomed out, but I'm definitely sure that the tech crackdown is not over, and also I think that the China is going through a semi-recession sort of effect right now, right? Whereas consumer spending is really slowing down, right? So could we see lower prices than now? That I will say it's possible. Everything is possible, right? But it's not very probable, right? But in my opinion, these stocks will continue to range, right? This straight up, a lot of people will be saying, oh, you should buy options or you should use leverage or whatever it is. But I urge you to be careful, right? Because the big moves has already been made, right? So all these news moves that you cannot predict, like when a news article comes out, you can't predict all this, right? So be really, really careful, right? At this time, right? Because it can just quickly go the other way, right? So if you look at Pinduoduo stock, right, you can see that just because it's rallying doesn't mean the bear market is over or whatever. You can see that at this point, right, it rallied about 45%, right, and still is from that point onwards, right, it's still low, 50%, 65% lower. Right? So it's always possible that this is like a bear market rally or whatever. So put that at the back of your head, right? I'm not asking you to not invest, right? Because obviously when you get all these opportunities, you still have to buy no matter what you believe is going on, right? If you think a recession is going on, because let's say it's a coin flip 50-50 that's going to be a recession going on, you'll still buy stocks that you think will perform well, right? Because at the end of the day, these stocks, their prices will follow how their fundamentals perform, right? Not whether there's a recession, whether there's speculation or whatever it is. So look at the fundamental prices, and if the fundamental prices make sense for the next 5 to 10 years, then pay it, right? Rather than waiting for the absolute bottom and waiting for, God knows what to tell you that this is a perfect sign to buy stocks, right? Because by the time all the uncertainty has cleared up, let's say China has come up, okay, we are ending all crackdowns, and then Baba is posting good earnings, Tencent is posting good earnings, Baidu is posting good earnings. By that time, right, the stocks will be reflective of those kind of prices, or maybe even shooting to the upside, because people are starting to believe all the story that China is going to grow forever again, right? So at this current point, everyone is very basically depressed and all because their Chinese stocks have lost like 80% of its value or something. Right? So I do believe this is the time to basically buy the dip. And basically, obviously this is not financial advice, right? But it's something I'm personally doing, right? So it's time to buy the dip, and also but be cautious of taking on leverage. Be cautious of being very stuck in the mindset that this can only go up, right? Because that will really hurt you in the long term. So yeah, that's about all I wanted to share today. If you did enjoy the video, do help me smash up the button, like button, hit subscribe, and also hit the bell button. With that being said, have a fantastic day ahead, and peace out.